Hi everyone, I'm Izzy, a California realtor. Today I'm discussing a topic many sellers misunderstand: how to evaluate and choose buyer offers. The most common misconception: thinking the highest offer is the best offer. This is wrong. I've seen too many times sellers choose the highest offer, transaction fails, buyer cancels contract, seller has to relist, wasting weeks, even months. Why isn't the highest offer necessarily best? Because an offer isn't just price, it contains many other terms. A $520,000 offer might look better than a $500,000 offer, but if that $520,000 offer has many contingencies, buyer's loan pre-approval isn't solid, earnest money is low, requires long closing time, that $500,000 all-cash offer with no contingencies and quick closing might be better for you. Today I'll teach you how to evaluate all offer components, help you choose the offer most likely to close successfully and benefit you most. I'll give you a decision framework and real case studies. Let's begin. A complete purchase offer contains 9 key components, each important. First is price. Of course this matters, but it's not the only thing that matters. Second is down payment amount and percentage. Third is loan type, all cash, conventional loan, FHA, VA, etc. Fourth is contingencies, including loan contingency, inspection contingency, appraisal contingency. Fifth is earnest money deposit, the deposit buyers pay. Sixth is closing timeline, how long buyers need to complete purchase. Seventh is buyer's pre-approval letter or proof of funds. Eighth is other special requirements, like whether you need rent back, whether buyer requests you repair certain things, whether certain furniture is included or excluded. Ninth is escalation clause, if multiple offers buyer willing to automatically increase price. All these factors together determine offer strength and likelihood of completion. As seller, you need to see the whole picture, not just that one price number. Now let me explain each component one by one, tell you what to pay attention to. Let's start with price. Price does matter, but what you should really care about isn't the offer price, it's your net proceeds. What does this mean? You need to subtract all costs from the offer, including agent commission, title insurance, escrow fees, possible repair costs, buyer agent commission you agree to pay if any, transfer taxes, any buyer closing costs you agree to pay. Here's an example. Offer A is $520,000, but buyer requests you pay 3% of their closing costs, that's $15,600, also requests you repair all issues found in inspection. Offer B is $500,000, no additional requirements, purchasing as is. If inspection repairs might cost $5,000 to $10,000, offer A's net proceeds might actually be lower. So don't just look at offer number, calculate how much money you'll actually receive. Many agents prepare an estimated net sheet for you comparing actual net proceeds of different offers. This is very useful, definitely ask your agent to prepare. Sometimes a lower offer actually gets you more money. The second key factor is down payment amount and loan type. This is very important because it directly affects transaction completion likelihood. Let's first discuss all cash offers. What does all cash offer mean? Buyer doesn't need a loan, they have all funds to purchase the home. What are advantages of all cash offers? First, no loan risk. Buyer doesn't need bank approval, no worry about loan rejection. Second, no appraisal risk. If buyer needs loan, bank sends appraiser to evaluate home. If appraisal comes in low, buyer might not get enough loan, transaction might fail. But all cash buyers don't need appraisal, or even if appraisal is low doesn't matter because they don't rely on bank. Third, faster closing. No loan approval process, transaction can complete in 2 to 3 weeks instead of 30 to 45 days. Fourth, fewer contingencies. All cash buyers usually can waive loan contingency, sometimes even willing to waive inspection contingency. All cash offers, even if $1,000 or $2,000 lower than financed offers, usually worth considering more because completion certainty is higher. If offer isn't all cash, then loan type matters. Higher down payment percentage is better. Why? Because high down payment means buyer has more of their own money invested, they're less likely to abandon transaction. Plus, high down payment loans are easier to get bank approval. Now let me explain different loan types. Conventional loan is most common and best. Usually 5 to 20% down payment, reasonable approval standards, not too strict requirements on home condition. FHA loan is Federal Housing Administration loan. Down payment can be as low as 3.5%. This is good for first-time buyers, but risky for sellers. Why? Because FHA has strict requirements on home condition. If inspection or appraisal finds problems, FHA might require repairs, otherwise won't approve loan. VA loan is Veterans Affairs loan, can be zero down payment. This is good for veterans, but also risky for sellers because VA also has requirements on home condition. So if you receive two offers, one conventional loan 20% down, one FHA loan 3.5% down, even if FHA offer is slightly higher, conventional loan offer might be safer. The fourth key factor is contingencies. This might be one of the most important factors. What does contingency mean? It's a condition buyer must satisfy to complete purchase. If condition isn't satisfied, buyer can cancel contract and get earnest money back. Three most common contingencies are loan contingency, inspection contingency, appraisal contingency. Loan contingency means buyer must obtain loan approval. If bank denies loan, buyer can cancel. This condition typically lasts 21 to 30 days. Inspection contingency means buyer can hire inspector to inspect home. If problems found, buyer can request a repair, reduce price, or cancel contract. This condition typically lasts 10 to 17 days. Appraisal contingency means if appraisal comes in below offer price, buyer can renegotiate or cancel. Like offer is $500,000 but appraisal only $480,000. If buyer only has 10% down payment, bank will only lend $432,000. Buyer has to come up with $68,000 instead of $50,000 to complete purchase. If buyer can't come up with extra money, transaction might fail. So when evaluating offers, look at how many contingencies and how long each lasts. Fewer contingencies, easier transaction completion. What's ideal offer? All cash, no loan contingency, no appraisal contingency, inspection contingency very short like 7 days or completely waive inspection contingency. But this kind of offer is rare. More realistic is a strong offer might be conventional loan, 20% down, loan contingency 21 days, inspection contingency 10 days, no appraisal contingency or appraisal contingency but buyer willing to cover gap. Sometimes buyers propose completely no contingency offers. This sounds attractive, but be careful. If buyer needs loan but waives loan contingency, if their loan gets denied, they lose earnest money but transaction still fails, you still have to relist. So even with no contingency offers, you must ensure buyer has strong pre-approval letter or proof of funds. Also note some states have cooling off period where buyer can cancel unconditionally within certain time. California doesn't have this, but understand your state laws. Fifth factor is earnest money. This is deposit buyer pays when signing purchase agreement, typically 1 to 3% of offer. Earnest money is held in escrow account. If transaction completes, it goes toward buyer's down payment. If buyer cancels during contingency period, earnest money returns. If buyer cancels after contingencies without valid reason, earnest money might go to seller. Higher earnest money, more serious buyer. 10,000 earnest money shows stronger commitment than 2,000. Sixth factor is closing timeline. How long does buyer need to complete purchase? All cash might be 14 to 21 days. Loan typically 30 to 45 days. Your situation determines what's best for you. If you urgently need to move or already bought next house, quick closing is important. If you need time to find next house or need rent back, longer closing time might be better. Make sure closing timeline matches your needs. Seventh factor is buyer's pre-approval letter or proof of funds. Pre-approval letter is lender saying buyer qualifies for loan. But not all pre-approval letters are equal quality. Good pre-approval letter comes from reputable lender, shows buyer's income, assets, credit have been reviewed. Poor pre-approval letter is only based on buyer's self-reported information. Eighth factor is other special terms. Does buyer request you repair certain things? Request you pay their closing costs. Request including certain furniture or appliances. Do you need rent back? All these affect offer attractiveness. If buyer requests a lot, even if offer is high, might be troublesome. As is, purchase offers are usually cleaner. Ninth factor is escalation clause. If you receive multiple offers, some buyers include escalation clause saying if there's another higher offer, they're willing to automatically increase price by certain amount up to a cap. Like base offer 500,000, escalation clause says if higher offer willing to add 2,000 up to cap of 550,000. This keeps buyer competitive. Now about multiple offer strategy. If you receive multiple offers, congratulations. This is seller's market benefit. You have several choices. Choice 1, accept best offer. Choice 2, give all buyers counter offer opportunity. Tell them there's competition requesting highest and best. Choice 3, counter several best offers simultaneously. Your agent will recommend best strategy based on specific situation. Let me give you real case study showing why sometimes lower offer is better. A Sacramento house market value 500,000 received 3 offers. Offer A, 520,000, FHA loan 3.5% down, request seller pay 3%, closing costs 15,600, inspection contingency 17 days, loan contingency 30 days, closing 45 days, earnest money 2,000. Offer B, 500,000, conventional loan 20% down, purchasing as is, no repair requests, inspection for information only, no repair requests, loan contingency 21 days, closing 30 days, earnest money 10,000. Offer C, 495,000, all cash, no contingencies, inspection for information only, closing 14 days, earnest money 20,000. Which did seller choose? Seller chose offer C, 495,000 all cash. Why? Let's calculate net proceeds. Offer A, 520,000 minus 15,600, closing costs equals 504,400, but high risk FHA might require repairs, might fail. Offer B, 500,000, no extra costs, medium risk. Offer C, 495,000, lowest risk, fastest closing, highest earnest money. Seller chose C because highest certainty, net proceeds similar, saved 6 weeks of time and stress. Now let me give you decision framework to help evaluate offers. Step 1, calculate net proceeds for each offer. Don't just look at price. Step 2, evaluate completion likelihood. All cash highest, conventional loan high down payment medium, FHA or VA low down payment lower. Step 3, look at contingencies. Fewer and shorter is better. Step 4, check pre-approval letter or proof of funds quality. Detailed pre-approval from reputable lender is best. Step 5, consider timeline requirements. Does closing timeline match your needs? Step 6, look at earnest money. Higher shows more serious. Step 7, evaluate special requirements. Are they reasonable? Do they increase your costs or hassle? Considering all factors, choose offer most likely to complete, highest net proceeds, best matching your needs. Now about warning signs. Warning sign 1, pre-approval letter from unknown online lender or no pre-approval letter provided. Warning sign 2, very short inspection period like 3 days, might not be enough time to schedule inspection, might just be strategy to request extension. Warning sign 3, requests very long closing time like 90 days, buyer might still be selling their current house, has risk. Warning sign 4, very low earnest money, shows not very serious. Alright, let me summarize today's key points. First, highest offer isn't necessarily best offer. Look at all terms, not just price. Second, offer has 9 key components: price, down payment, loan type, contingencies, earnest money, closing timeline, pre-approval letter, special requirements, escalation clause. Third, calculate net proceeds, not just look at offer. Subtract all costs to see what you actually receive. Fourth, all cash offers safest, conventional loans next, FHA and VA have more risks. Fifth, fewer shorter contingencies make transaction easier to complete. Ideal is no contingencies or very few. Sixth, High earnest money shows buyer is serious. 7th, pre-approval letter quality matters. Detailed pre-approval from reputable lender best. 8th, timeline requirements must match your needs. 9th, with multiple offers can request highest and best. 10th, sometimes lower but stronger offer better than higher but weaker offer. Use decision framework to comprehensively evaluate all factors. If you're receiving offers in Sacramento and need help evaluating, I offer free consultation analyzing each offer's pros and cons. Click description to schedule. Next video I'll discuss common seller mistakes and how to avoid them. If helpful, please like, subscribe. Comments tell me what kinds of offers you've received. Remember, choosing right offer as important as pricing right. Thanks for watching.